Hello there, this is fairbinaryoptions.com, and like the name suggests, this is intending to show you how to treat head and shoulders and inverse head and shoulders in our case here with binary options. Now, as you probably know, a head and shoulder or an inverse head and shoulder is a reversal pattern, and because of that, prior trend looks to end, and it signals weakening in the prior trend. Now this is a daily chart on the Great Britain pound New Zealand dollar, and as you can see here, price is coming from the upside quite for some time, and now it is forming this possible inverse head and shoulder that you see in front of your eyes. Now a head and shoulder or an inverse head and shoulder like this one is a bullish reversal pattern, and it is being formed out of three different elements. First of all, we are having the head. So this is the head. Let me mark it down here. And the head generally is being formed, or it is taking the shape of a spike. This is a spike to the downside, as you can see, retraced all over again, and price is hesitating now here right at the same level that it was hesitating when prior to the spike here. So the head, if you want, comes from here and ends actually here on the right side, something about that, and this is the head of the inverse head and shoulder. Now we do have a left shoulder and a right shoulder all the time, and the left shoulder normally is being this one, of course, on the left side. So left shoulder, and of course the right shoulder is on the right side, right shoulder. There is a strong tendency that the time taken for the left shoulder to form to be almost the same on the right shoulder here too. It is not mandatory, but as close the relationship between the two, the more powerful the pattern. Now a head and shoulder or an inverse head and shoulder pattern has an important tool called a neckline, and the neckline is the line where price is hesitating after making the low, in our case here, and such a neckline is let's say controversial, because some people draw it exactly by the moment the price hesitates. Take a look here. So price comes here and then being rejected to the downside, again hesitating here, or other people just place the neckline, I don't know, in order for price to touch as many common points as possible, something like this, trying here and then here, then here, then here, and so on and so forth. I would look for the second option, like this one, and this to be my neckline for this potential inverse head and shoulder. And what I really like about this one, about this pattern, is the fact that any head and shoulder or inverse head and shoulder comes with a measure move. Now the measure move is the amplitude that comes from the top of the head here, or the bottom of the head in our case here, to the neckline. Let me change the color for it, like this. And this measure move should be applied by the moment the neckline is being broken, but not necessarily here, okay, but the value is almost the same when price will try to exit the right shoulder, and the measure move is, as you can see, to the upside like that. Now from our point of view, take a look at what kind of a distance price should travel. We have here from 176 area, as you can see, up to 2.18. This Great Britain pound New Zealand dollar is a pair that travels fast, and this is the measure move. Now In order to trade binary options with head and shoulders and inverse head and shoulder, what one needs to do is to take the time element into consideration for the left shoulder here, measure it, let me change the color for it, let's put it something like this. So measure it, and then take the measured move, the time measurement, put it on the right side, and there you go, you have the time element for your right shoulder as well. So what to do here in order to trade binary options is to look for price to break out of the right shoulder, ideally breaking to new highs, and the highs should be the highs previously established here, and by the time the time element here expires, then we are looking to buy calls. So we are looking to buy calls after this trend line is being broken, because the inverse head and shoulder is a reversal pattern, and it is a bullish reversal pattern because it comes after the prior bearish move. So we are looking here to buy calls after the trend line is broken. Let me take a line here to write it down. So here we are looking to buying calls after neckline broken and time expires. Now this is a daily chart, so it doesn't necessarily mean that you will buy calls based on the daily chart, but the principle should be the same on every time frame and on every head and shoulder and inverse head and shoulder that you see. Whenever you have your neckline, a head, a left shoulder, a right shoulder, by the time the time element expires, then looking to buy calls for diverse expiration dates. Is it strong tendency for price to retest the neckline after breaking? So this, let's say, to be broken, retesting, and then to go higher. If you want, you should engage in buying calls at the retest. Depending on the time frame, your expiry date should be as high as possible. For example, this is a daily chart. Then look for expiry dates, something like end of month or 1 or 2 weeks expiry dates, depending on the price structure you have by the time this is broken to the upside. Now this is why I want to show you today with this how to treat inverse head and shoulder with binary options. This is normally buying calls because this inverse head and shoulder is a reversal pattern, but if you were having a head and shoulder, then normally you should buy puts after the neckline is being broken. So thank you very much for having me here at fairbinaryoptions.com, and please feel free to subscribe at on our website. We have a lot of offers and bonuses. So bye bye.